Nike is making some major changes after a big strategy decision has backfired. Nike is replacing the CEO as the former CEO retires, and new CEO Elliot Hill joins Nike starting October 14th. So with all these big changes, I wanted to dig a little deeper into Nike and understand what's going on with this iconic company and one of the most recognizable brands in the world.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Elliot Hill will join Nike as the new president and CEO on October 14th. Elliot Hill has 32 years with the company, so this is not an outsider. This is somebody who's very familiar with Nike and will join the company with relationships and history with the company going back 3 decades. So given this CEO transition and with 75% of the year left to go, Nike withdrew its full year guidance for revenue and profitability. Now, whenever a company removes a guidance or guidance for the year, it reduces transparency. And whenever you reduce transparency, you're increasing risk for investors. Just because now there's more uncertainty. And whenever there's more uncertainty, that means a greater risk, right? There's more chance that things could be worse than expected and more chance that things could be better than expected. And so that drives increased risk profiling, or when you're evaluating a company's risk, you're attributing a greater risk number to a company that doesn't provide annual guidance. But this provides the new CEO with the flexibility to reconnect with the employees and teams, evaluate strategies and business trends, and develop our plans to best position the business for fiscal year 2026 and beyond. And I agree with this. If you were not going to remove that guidance and then the new CEO comes in, the new CEO would feel obligated to meet those targets that were set out before the CEO came in. And that takes away flexibility. Maybe the new CEO wants to have a more growth-oriented strategy, which might hurt profitability in the near term, but that strategy would not fit with the revenue and profit guidance the company laid out already. Or maybe the CEO wants to focus on a more profit-oriented plan, but that wouldn't mix with the revenue growth expectations that the company delivered before the new CEO comes in. So by removing the guidance, that gives the new CEO flexibility to take a look, evaluate the company and the environment and the market, and decide what's the most prudent strategy forward without being tied to a pre-existing strategy before the CEO came into the company. So Nike goes on to say that we are moving aggressively to shift our product portfolio, create better balance in our business, and re-energize brand momentum through sport. And we're going to hear a lot about this during Nike's conference call. They are focusing more on new. They're focusing more on new products, and they want to be less reliant on older brands and older names and styles that have proven to be effective. Nike feels that they oversaturated those models. Think of things like the Jordan brand, right? Jordan brand has been extremely lucrative for Nike, and over the recent couple of years, Nike feels like they relied on it too much, releasing too many Jordan brand shoes, and that saturates the market, that reduces the exclusivity of the brand, that reduces the scarcity of the brand, and that kind of hurt Nike according to what management is alluding to. So they want to shift and they want to develop newer brands, newer styles that generate a larger percentage of revenue and profitability. And then that way they can retain that scarcity element of some of their most popular brands. The company said that their first quarter revenue was largely what they expected. They delivered lower unit sales, but that was offset by higher average selling prices. And Nike has gone a long way in the last 5 years and the last decade of increasing the average selling price of products that it's introducing to customers. And so the lower unit sales is not surprising. And this has been common in the last 3 months I've seen, and in the last 6 months, I would say, in the economy worldwide with companies. Companies noticing higher inflation and higher input costs really drove increases in average selling prices, really pushed the limits of raising prices. And now they're starting to see lower unit sales as a result of these higher prices. I'm seeing this with companies like Pepsi and Coca-Cola. I'm seeing it with companies like Nike, where they really push the envelope and try to test consumers and see how much they would continue buying. And for a long time, for several years, right, from like 2022 until early 2024, the customers of these companies just kept buying the same amount or even more of their products, even though they were 15 to 20 to 25% more expensive than they were in 2020 or before the pandemic. But now we're starting to see, and I'm starting to notice companies reporting decreases in unit sales. I'm starting to see consumers saying, no, you know what? Enough is enough. These prices are way too high, and I'm going to buy less of your product because the price is just too much. And so, because of those decreasing unit sales, Nike's reporting slightly elevated marketplace inventories and required higher levels of promotional activity in Q1 to drive conversion. Nike also saying that they saw particular softness in traffic on Nike Digital as well as their partner stores in Greater China. At Greater China, that market has been a headwind for many companies that drive sales in that region, including Nike. I saw that from Starbucks. I also saw that from Apple, where their sales have been soft in 2024 and in the latest quarter of 2024. And that's partly why, if you saw me do some videos about my Chinese related stocks like Alibaba, they saw a huge lift as the government said that they're going to try and stimulate the economy because economic growth in that region is really faltering. And so companies that operate in that region, they're also seeing sales fall because of slower economic growth. So all that being said, some very slight good news was that Nike did see some store traffic improve in August. So that was the last month in their quarter. So at the very least, at least they saw some upside as they exited their most recent month of their most recent quarter. Although the near term does not look strong for Nike, it looks like they will continue to face headwinds on the top and bottom line as they try to shift these strategies. And one thing I was surprised not to hear too much discussion about from Nike in this latest conference call, and maybe we'll hear more about this when the new CEO comes in and kind of gets a handle on things, is this strategy with wholesalers. I was expecting to see a lot more about how Nike will deal with wholesalers. Remember, these last few years, they've kind of reduced the importance of wholesalers and tried to go direct to consumer. And that had the impact of boosting profitability, but that also had the impact of decreasing sales and decreasing unit sales, as we saw, because if you're in fewer places, if your distribution channels are not as robust, you're not going to drive as much sales because you're not going to be in all of the places that customers go. Whereas if you encourage wholesalers and you offer your products to more and more wholesalers, your products are available in more places. And of course, if you give consumers more places where they can buy your product, it's going to drive more sales. And you also have those stores and those salespeople helping consumers buy and encouraging people to buy. And Nike has been having less of that since that strategic shift. So I was hoping to hear more about that. I did not hear more about that in the conference call. So I'm looking forward to the new CEO coming in and explaining more about what they plan to do with that strategy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.